Thank you for joining us at xm.com. In this preview video, we'll be looking at the European Central Bank coming up on Thursday and the outcome for the euro. I'm Cristina Marujos. With me today is Cristina Barcenido, investment analyst. So, Cristina, the March ECB meeting is coming up this week, and although no change in policy is expected, investors, of course, will be looking for any hints at when the first rate cut will be delivered. So, do you think President Christine Lagarde might offer any hints or reveal anything?
Hi, Christina. It's nice to see you here. Well, I don't think that the European Central Bank has sufficient information and perhaps the confidence, let's say, to announce any rate cuts at the moment. Inflation remains, of course, the number one concern, and it did decelerate during 2023, falling from 10.6% year-on-year in October 2022 to 2.6% year-on-year in January this year. But policymakers cannot guarantee that there will be no additional spikes, that there will be no resurgence given the geopolitical risks in the Middle East and Ukraine, as well as the elevated wage growth, which rises, which is still above the inflation rate. So, in other words, there is no evidence that the downfall in inflation is sustainable, and it might lead inflation towards the central bank's 2% target. And of course, the central bank would like to lose its credibility by, lowering interest rates prematurely. So I believe that the central bank will remain data dependent this time and provide little direction about any potential rate cuts as soon as June. It has one more meeting in April and several data releases to study before its June meeting. Moreover, the next wage negotiations are, I think, at the end of May. So the central bank may wait and see how things will develop in the region, whether there will be more downfalls in inflation before it decides about the next move in interest rates. Now, what would be more important to watch, I think, during this week's meeting, I think the central bank's new economic projections might be quite important. Specifically, the updated forecast for inflation could give us some insight, indirectly, of course, about policymakers' thinking. If forecasts show inflation reaching the 2% target earlier than previously expected, and economic growth slowing faster in 2024, that might suggest that rate cuts might come sooner, and perhaps that could also make a June rate cut more real.
And turning to the market reaction, Christina, how could we see the single currency perform this week?
Well, if you look at euro-dollar, the pair is still, still maintaining the rebound from mid-February, but is still within a range constrained between 1.08 and 1.0880 for a couple of sessions now. And well, perhaps the pair could bridge the 1.088 resistance if, for example, the central bank disappoints those who are eagerly waiting for rate cut signals at this meeting. But overall, the calendar has a couple of key events this week, which could still create volatility in this market. The Fed chief, Jay Powell, will testify before Congress on Wednesday and Thursday. And we also have Friday's local payrolls report, which could be a bigger market mover for FX markets. So, perhaps in this case, a more dovish Powell or a negative surprise in non-farm payrolls could help the pair to extend higher. Now, on the other hand, if the US economy proves resilient again, the pair could lose some gains, and perhaps it may reverse lower to retest its crucial 1.0790 support region.
Christina, thanks so much. The European Central Bank meets on Thursday. This was a preview report here at xm.com.